Welcome to Second Take, the show that focuses on the issues behind the news. Struggling Anglo American Platinum is going headlong into market development, geographic demand diversification and overhead stripping as it reels from a 264 million rand loss in the first 6 months of 2012. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Now, Amplat's acting CEO, Bongani Nkwababa, says the company is looking at better opportunities for platinum. Can you elaborate on this?
Yes, they're going headlong into market development and they're looking particularly at fuel cells because their big reliance at the moment is on catalytic converters. But fuel cells, the loading of platinum in a fuel cell is about 4 times that of a catalytic converter. So they're very keen to get into fuel cells. And they're wanting to do it as a collaborative effort with the government, create that platinum valley we've been talking about. And they also want to get into the platinum uses in LED lighting, that they see that as a big opportunity. So they're looking for opportunities in marketing because that creates that demand which they're lacking at the moment. They're also looking for geographic diversity because they feel they've been too Eurocentric. Most of that platinum goes into the diesel vehicles in Europe. And they've relied too heavily on that. And now with the severe downturn in Europe having impacted and now worsening, they feel that they should spread that demand as far as possible. But they also suffer from a rich child syndrome. They were born in times of plenty, and they feel that they've got to look at their overheads and strip out the cost of their overheads before they go near the workers. So they don't want to start saying to the workers, look, we've got a right size because they've got 58,000 people. And then the workers turn around and say, gee, look at all that fat upstairs. So they want to cut that to the bone first so there can be no finger pointing. And also I think it's right that there should be a lean and mean and fit corporate structure. And then it does seem as though there is going to be some retrenchment along the line. But they're really working on very humane type of retrenchment using the Marikana as the model. Where 1,800 people were retrenched and they've managed to find work for about 1,750 of them. There's only 42 people who they haven't found jobs for, so that's quite incredible.
Now, the current crisis is seen as an opportunity to work intensively to reduce overheads.
Yes.
At a sustainable level.
Yes.
What do they intend to do there?
Yeah, they need to strip out some of these excessives that have been built up over the years. Often when you talk to miners, and they might be gold miners, and they compare their cost structures with those of platinum, or they might be in other sectors of mining. They always remark that why does it cost so much, to mine platinum? And it seems to have been a tradition that they felt that they were the sort of Rolls Royce of the mining industry, and they needed, commensurate sort of build-up around the overhead structure particularly. And so they really want to strip that down to the bone as a sort of first measure. But if they've got to do a lot of things in one go, and the others are, of course, looking for more market. So I think one of the things that they don't seem to want to do, and I think it might have been a more immediate model to try and straighten out this platinum price because it just keeps falling, is take the example of the chrome industry. What the chrome and ferrochrome industry did in 2008 is they just closed down those furnaces as fast as they could. But, but there was also this idea that you don't retrench anybody. So what they did is they sent, the one company sent 6,000 workers back into the classroom because they felt they needed training anyway, and this was giving them a breather to do it. They were getting a bit worried, as they needed to start lifting their revenue at one stage, but they succeeded and got their furnaces back on without retrenching anybody. And they're still in that position, although some of their furnaces have gone off again. But I think maybe there does need to be some market discipline, which hasn't come into the equation yet, where they need to be firm on closure for temporary periods, just to try and help this price.
Now, platinum has a strong future in a low-carbon world. Can you elaborate on that focus?
Yeah, platinum, they keep saying, is green. and they're emphasizing that. I mean, they should have been doing a far bigger marketing job, I think, for a long time. The last 3 years they've started to really accentuate that. But it has been because of change of leadership in platinum. We had Barry Davison there, who every time we asked him, when will you be introducing fuel cells? He would say in 5 years' time. And then you'd go back the next year and say, well, when are you going to introduce fuel cells? And he would say in 5 years' time. And, this kept extending out. And then he resigned, and Ralph Harvestein was sort of parachuted in to try and cut costs and deal with the operations, etc. And then he resigned because of the tough job of trying to bring safety into those deep, dark and dangerous mines. And he felt that he couldn't stomach it. So he quit rather suddenly. And then Neville Nicolau has come in, and he's done a lot of good work in the operations, and he came as a COO from the gold mining industry, so he knew what to do in the mining operations, and has done a lot of good work there. But you can be the best manager in the world. If the price falls, there's nothing you can really do. And so he has now handed the reins over, and we've got Bongani and Kwababa in charge on a temporary basis as well now. But he's taken that to like a duck to water, and I mean he's working flat out until Chris Griffith comes in from Kumba Iron Ore on the 1st of September. That low carbon idea is that the world is wanting to reduce its carbon. Platinum can do it, both in the big power generation scene and medium power generation, and in your vehicles. The vehicles can be run with only the byproduct being water and virtually emission free. You've got the same potential with power generation. There could be a situation where, like we brought our TV sets into our houses and built special alcoves for our TV sets, perhaps we're going to have little power stations in our homes, which are fuel cells. And perhaps there'll be architects building these into the house. And that would be a massive big demand then for platinum. Fuel cells require platinum and nothing else. You can't substitute it with another commodity. So it is a very good one. And we've got the world saying, we must lower our carbon, and you've got platinum that can do that job. So I think the two coming together could be a massive contribution.
Now finally, Nkwababa is against a single-channel marketing organization to stabilize platinum prices, such as, for instance, Canada did with potash. Can you tell us why?
Yeah, no, he thinks that'll fly in the face of free market principles. In Canada, they've got that single-channel marketing. All the producers work together, and the Saskatchewan potash is sold and delivered by a company which is owned by the producers. And it's a voluntary arrangement, and it was introduced 40 years ago when they faced similar crises. Price plunge. We must try and stabilize the price, set in a floor price, saying that we won't sell potash below a certain price, and thereby you stabilize it. Now, I think Bongani and Kwababa is within that camp that sees this as a cartel. And, who knows when the world starts running short of food, as we're starting to worry now with the droughts in the United States, etc. And food security is the issue. The world might say to Saskatchewan, hey, you cut that out, because you're operating a little cartel there. And the poorest people in the world are not having food because of what you're doing there. You're outpricing it. So there is a potential charge of that nature, that you will, accusations might be leveled at you. The people proposing the single-channel marketing idea and the platinum exchange, they've got very good intentions. They're saying, look, we are a dominant supplier of platinum. It's a reputational issue. South Africa is the supplier. If you are that dominant supplier, you owe it to the world to have those supplies in a stable way. And the only way you can create that stability is if you have a floor price, because then you make sure your employment stays in place, your operations, you know how much to sell. And so then you're doing it as South Africa Incorporated. not just a single mine. So that's the way they see it, and they're saying, well, look, the Canadians get away with it, so why can't we? But generally, there's always an uneasy feeling about price fixing, and I think Bongani and Kubaba is reflecting the attitude of many people saying, look, we don't want to get into that. Let us rather engage in market discipline. Let us rather engage in consolidation of our industry. And through those measures, we'll in some way be able to influence the price. But, you know, miners are price takers. They're not price makers. And I think that's the way they're going to have to stay. And so they have to be quite lean and mean and nimble. You know, if there is a situation of price collapse, they may have to stop those supplies very fast. That's why I'm a little bit worried about the pace at which supplies are being stopped, because you see this continual fall in the price. And we know that the suppliers are surplusing, which is not a good mix.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.